So Chan says, there are hundreds of stocks out there. I know how you select. Do you use a stock screener? If yes, what is the stock screener? So I use this website. It's kind of a handy website. I'll give this to you. Yes, there are hundreds of websites. Let's put this on. So you can see this kind of basically, tells you the day's winners, the day's losers, and actually it's handy. You can actually just hover over the symbol here and you can see the chart. And, sometimes I'll just go very quickly through these things and, I'll just see a chart that, will look interesting to me and I'll stop and then just look at that in greater detail. But, in order to use the screener, just come to the screener here, hit screener. And now you can go to, what exchange do you want to look at? The NASDAQ. Do you want to look at any, mega, market capitalization? So mid cap, any, stocks with dividends that you're interested in. And is there a sector that you're looking at? Healthcare, energy, what have you, country, anything. Is it, you want to have a shortable stock, price, over $50, whatever you want to do. So this will give you all of the energy stocks, with market caps here in this space. And then you come here and you take a look. And so it's a great tool to really look at whatever sector you want to look at, consumer, cyclical, defensive. I do think that the cyclicals are going to be, really where it's at, in a rough patch in the market. So, I would just look for certain cyclical stocks that look like they may have interesting patterns. That actually looks like it's a great short right there, Jack in the Box. I don't even have to look beyond that. Looks like a descending triangle. So yeah, I'll just go to a screener like that and, look, I could spend hours and hours. So yeah, this is Jack in the Box, and I just saw that now. And based on what I'm looking at, I can just, reflexively see these charts in my sleep. So this looks like it's, setting up for a sale. You can see that, we had double or triple top there, crack through the neckline. So this has been the governing price pattern. This has been governing or dictating the price action in the stock, and looks like it will continue to do so. And then more recently, we're cracking the underbelly of this descending triangle. Just like, so, unlike the dollar yen, you can see that the dollar yen kind of did this and then stopped up here and then started sneaking out that way. So these patterns you can, so you see now that this has tested this thing so many times that now we're likely to crack underneath here. So I just saw this thing right now in that stock screener in that little corner box. And this would be a great little trade on the short side. So Larry says, I love the site, greatest play, more choices than I can keep track of. Well, that's it. So basically, think about what's happening today. Energy's been hot. So you can look in that. I think the market's going to get more speculative. I think growth stocks are going to get punished. And I think, more defensive, cyclical stocks will have perhaps some, a place to hide. So you can see RRR, this red rock, whatever this is going higher and looks like it's going to keep going higher. This is going higher. So I can just come in here and just do this analysis till my heart's content. And you can go to different, different exchanges. And so you can see, I would just buy these cyclicals, whatever this Ashbury Automotive Group. So that's basically it. So I don't know, Mark, what your broker is and what your situation is there. I can't really comment. So Chris says, so how do you set your risk in pips? So again, I try and look at the setup. So, let's kind of look at maybe a setup today. I'm looking at the pound New Zealand. I would, yes and no. I think this is going to somewhat go higher. I do think it'll go higher. You could probably put a buy stop above today's high. So this is the pound New Zealand. All right. So maybe not the greatest choice, but I think that this is right here, the driving pattern. Doesn't look like it, but there are other patterns on the weekly and the daily that to me suggest that this thing is in a stealth uptrend and will go higher. But this is, you can see, just a very messy pair to trade and very wide swings. But I do think that you've got another bottom here and that this is a bit of a reversal today. Made a new high, new low, closed there. So the way I would set this trade up is I put a buy stop here and then put my stop loss, somewhere maybe, below unchanged, so, if it starts to reverse lower, but really, I mean, the stop should go, right there, under today's low. And so what does that look like? Pound New Zealand, the low was 195.88. So, and the high was about, I can't see what the high was. Call it 196.26. I put a buy stop at 196.30 and maybe a, sell stop, in the low 195s. So that's, so whatever that is. So 96.30 to whatever the low was. Let's just use the high and low. So the low was 195.28. The high was 196.28. So that's about 100 pips. So that's how, I come up, or derive the stop parameters. I want to really just keep it out of the way. And, if I'm wrong and it takes out, yesterday's low, then, I just want to get out. So coming back to the calculator here, drop to pound New Zealand. I have my whatever 3,400, and I want to risk 0.8 and I want to risk 100 pips. Hit the calculate button and it tells me how many pips I can buy in pound New Zealand for my account size using that risk parameter. And Marie says, should we just get in and out of the messy ones? I don't know what that means, but I try and not get messy. I trade off the daily bars so it doesn't get messy. It gets messy when you trade off the 5-minute bars. So I put my, my stop in, I put my risk in, and then let the market do its magic. So another stock that I'm kind of looking at tomorrow is Roku. It's kind of got an interesting formation. So it's got a host of bear price patterns, Roku. So you can see here, you had a double top, head and shoulders. Here you have a double top. And it's been going, straight down since then. It's in a, tricky kind of congestion area where there is support. So whenever you come to these areas, they do have these bounces, but it feels like, so now, once I kind of feel like I understand the direction, you want to kind of get in the direction. You want to surrender to the will of whatever that market is. And I think that we can all agree that from whatever this is, 490 to 320, it's been in a downtrend. So you want to get in sync with the trend. You want to look for a way to hook up. And so you can see you have all of these kind of, you have a mini reversal in here. So once I understand the direction and the pattern, then I look for what I call my insurance day bar. In this case, it's a key reversal. Whenever I kind of see something that makes a new high and close on the low where the sellers are in control in a context with something that is already going down, then basically I will just put my sell stop underneath this also. And then the other insurance day bar I use is an inside day bar. Don't really care where an inside day bar closes. To me, it's just the fact that it's just building energy. It's just coiling. An inside day bar literally is where the range of this particular day, the high to low, sits within the range of the previous day. And you can see that's exactly what happened today. So you have that reversal yesterday, kind of this hanging out today, this coiling, the storing of energy. And so I'm going to surmise that the energy is going to go back in the direction from whence it came. So all I'll do is sneak in a sell stop underneath this low, close right on the low around 320. So whatever you want to put it, 319.5 or what have you. I was actually trying to think about shorting it in the, yeah, it's already going down in the aftermarket. Closed at 320 and we're already kind of going lower in the aftermarket. So these markets are currently moving. So this is why, the Qs closed at 357 in the regular session, but they're down about 120 right now in the aftermarket. It looks like the Roku's going to open lower, and I would just look to sell into that. And, basically you could use this as your stop loss, whatever today's high was, which was 324.85. So, just 326 or what have you. So you got maybe a $5 risk for what could be a, $100 reward. And so it doesn't matter what instrument you're looking at. I don't care if it's crude oil, gold, pork bellies. I don't really care what this says up here. I would look at this price history the same. Interest rates, it doesn't matter. To me, you either have accumulation or just distribution patterns. And this, is a distribution, a selling pattern. Looks like there's just a huge amount of selling above here. And if we trigger this, it could really trigger a massive sell-off. Nicholas says, are you still bullish pound yen? Yes, I am. I'm also in pound yen for the same reasons that I am in the dollar yen. I think all of these yen trades are going to go higher. So if we look at the pound yen, this has just formed a massive base. So just a huge, so we have what is called an Eve and Adam double bottom. An Eve is where you have two attempts or multiple attempts at a certain low, and an Adam is just a single. So you have a double bottom, whatever you want to call that, and then you have this inverted head and shoulders, which just looks like an upside down man or woman's head and shoulder. And the double bottom and the inverted head and shoulders connected by that neckline at about 150. And you can see that we thrust above there, we retested it, and now once we make a new high, it will really confirm that retest, and this will be a launching pad to go much higher. But I always say the bigger the base, the more into space, meaning that this thing is just constructed in a massive, it's one thing if you want to put a shed in your backyard, you wouldn't really have much of a foundation. But if you wanted to, build an, 80-story skyscraper, you'd want to have a nice foundation. And this whole thing is just a massive kind of cup and handle also. Looks like a teacup and handle. That's also a bullish pattern. So this whole thing, once it gets through 156, it looks like it'll be lights out. So Nicholas, is it too late to get in? No, not if this is just starting, actually. This is just starting. So that's basically what I wanted to talk about. I can look at 1,000 charts. Somebody's talking about BABA. These are the Chinese stocks. They made a new high. Actually, I want to see what JD did today. JD is a stock that I'm looking at. But I'm very skeptical of the market. I think you're going to get punched in the face tomorrow. You're going to have a CPI report, and I feel like the stock market's going to sell off. So you had a reversal in JD yesterday, and I don't know. I think it's going to go lower. Alba's had a bounce off the bottom, but I think it's still in a downtrend. You had a key reversal yesterday, and so likely to go back in the trend lower. So I do think the market's going to go lower. What else is there to talk about that I'm looking at? There's just, again, 1 million stocks, 1 million different charts, but I analyze everything just the way I have on these charts. Doesn't matter what the trading instrument is. So that's really kind of, so when we look at BABA, let me just peel out of here and see if it gives us more history. No, it's not enough. This all started from a pattern. So the patterns inform us, what we're looking at. And then once we understand what we're looking at, then we're just trying to, get in sync. So right here is kind of this double top right there, but it's just one big giant head and shoulders. So all these things, we look at the same patterns and they repeat, and that's the beauty of these patterns. And then, typically they give you a fake out where they go through the pattern. You can see here, it went through, and then you get a retest. And then when you fail, then you know that this thing is real. And so this has been the guiding or governing price pattern for a long time. So notwithstanding the fact that recently, we learned the Chinese were interfering in the economy and stocks, and it just sent, prices cratering. It already told us way back here that it was over for BABA. That's why I say the market is a discounting. So, all the way back here, this distribution pattern was telling us that it was over. You can see there's another head and shoulders right here with like a drooping head and shoulders, and another double top here, and then another one here. And so the market gives us these patterns and price action that we can, but once we understand what the game is, it's not to say that, once we have a pattern that says that we're going to go lower, doesn't mean that we're not going to go higher. It's just understanding that every one of these move higher you should sell into, until there's a pattern that tells you that the opposite is happening, that there is a bottoming pattern. And I don't really see that with BABA. This was just a huge, kind of a release valve where it just got oversold. And now it looks like it wants to go back in the direction of the pattern. So, again, once I understand what I'm looking at, then I look for, my pattern, this tells me all the way here. So, that was months and months ago, but I'll still use that here. I'll see the double top here. Then I'll see the key reverse, the key reversal right there, made a new high, closing the low, and just get short there. And now you're in there. And, you've got a nice move. And that's kind of how I get in and out of the market all of the time. Facebook, same thing. I just took $15 out of 8,000 shares on Facebook over the last 3-4 days. And I got out today, right on the low at 317, which was somewhat lucky. I saw that there was a bit of a trend line, coming in here, but it still looks pretty bearish for Facebook, but it's sitting on a very interesting inflection point. So Facebook also, this is what I saw, the double top and the head and shoulders. And so, sorry about that. Once I kind of understand the bear pattern, then I look for a place to join the trade. And you can see right here, made a new high, close on the low. So then last Friday prices started going back up. And so I used this as my risk, knowing that, I was looking at a bear pattern here. And so I just sold into a higher move on Friday, I think it was at 332. And I got out today at 317. So that's what I look for, these nice moves, whether it be 10, $15 or 40 or several $100. Facebook was kind of sitting on an interesting inflection point. It's got this head and shoulders. So now once I see a pattern, now, the market either respects the pattern or it doesn't. So you can see how it came right down to this neckline, this drooping neckline that can, basically conjoins these two shoulders. So bounce right on the bottom of that thing. So, I was kind of looking at this guy over here and here, that this was generally a support area. And it was lucky. I mean, I got, 3 good pushes and I just covered right there today, sold there and covered there and made like 120 grand in 3 days on that trade. Where does it go from here? Hard to tell. I don't fight these key reversals now. I, wouldn't really want to short into that. But, if tomorrow we, look like this, then, I'll be ready to go again. So, so Larry, I can't understand what you're trying to say. Benson says, hi, Mark, for someone with a small account size, how do I trade the stock market? I noticed there are rules that restrict the number of trades per week. And that is true. So if you have less than $25,000, you can't get in and out of trades. They then start labeling you a pattern day trader, and you have to have $25,000 minimum account in the United States. It's just a BS rule. I think it hurts the little guy. It forces people to put up more money than they wanted to lose in the first place. But, I'm not going to get talking about governments. No love lost there. But the rule is really the same for, measuring risk, on a stock. There's no real calculator. So you have to kind of understand, let's just take a hypothetical. Say you want to buy it here, at 323, put a stop at the low. So your risk is $6. So, and you want to risk, and let's say you have, I don't know, whatever the account size is, $5,000. So let's say you want to risk 1% on this trade. 1% of 5,000, I think, is 50. My math is terrible. So that's how much, so this would be your risk. 1% of $5,000, that's how much you'd want to risk. So if your risk here is $6, then you can buy roughly what, eight shares. 6 times 8 is $48, right? So you're risking $6, and you don't want to risk more than $50. So that's how you would decide how many shares to buy or sell using those parameters. But Benson, I can't help you out with regulations. Yes, if you go in and out, they will ding you. On the other hand, yeah, so you could trade. I wouldn't suggest trading puts or calls with a smaller account. It's highly speculative. Jimmy asks a very good question. How has your trading changed from earlier days? And that's a really good question. And that's the beauty of the markets. As long as you keep trading, you can never kind of learn enough or absorb enough. And to me, and I think it's always the case, because, it's funny how, the market can go, either up or down. It seems pretty simple. And yet, why is everyone losing? Because we all struggle with the 6 inches between our ears, right? Even when I see something, so cleanly. It's hard not to get, buzzsawed or whipsawed or emotional or what have you. And so it's always trying to come to terms with whatever the demons in your brain are. And we all have things that destroy our ability, our potential. I stand back and I look at certain charts and I see everything so cleanly. But, I always make, I wouldn't say I always make, I make a mess of it. I get out too early. I do certain things. I always get in trades too early. My whole thing is, I see something, so I think everybody else is seeing it. And so I always get in too early. But I am extraordinarily adept at finding the time. What I try and do is, get a market when the horse is about to come out of the gate. You have a double bottom, the market's been going down, you bottom, and then, I'll start seeing this bottom, early, and I'll start buying it here. So, once it gets up there, I've made a tremendous amount of money. So, here was a trade that I was looking at. This was back in February. Well, I do this thing on Fridays called the master pattern, or the underground trading sessions. And so you can't really see here. I'm saying the key reversal at the peak of an ascending broadening price pattern suggests that the trajectory could be lower in the stock market. And that was on Sunday. But on the prior Friday, when I observed that close, I started thinking that this thing is going to drop. I saw it go to the absolute top of that thing, and I saw it early. So, on that Friday, I started accumulating these put options in anticipation that the market was going to fall. So the QQQ is a proxy for the NASDAQ. A put is a bet that the market's going to fall. Now, when I was putting these on in, February 19th, the QQQs were trading about 334. And you could see that my strike price was 320, which was, a long way away. It had to have like a 5% move for me just to get in the money. And it had to do it by the end of that week, or I was going to lose all of my money. And I put quite a bit of money into this. You can see I bought 350 put options of the 320s at around $1. And you have to multiply that times 100, because each option is based on 100 shares. So I had 350 options times $1. So that was a $35,000 bet. And I did the same thing on another account. I had two accounts loaded up the same way. So I had $70,000 bet that this thing had to drop huge by the next week, or I was going to lose all of my money. And by the following Tuesday, by the following Tuesday, February 23rd, I made between 6 and 10 times my money. I got a 585, 575, 631, and $8. I made 200,000 on my 35,000, and I did that in two accounts. And I did that in the following week again. So it's basically, I don't know what the question was. So, my I think ability is that I can see things pretty early. The problem is, like Beyond Meat, I know I'll be right. Sounds pretty arrogant. I just don't know if I'm going to be right for my options. So this thing has just been, it just found support along an old support line, but the major patterns are so bearish that this thing, has to collapse. And I've made a ton of money on Beyond Meat. These were some call options. Let's see. I think I showed them to you yesterday. Yeah, I bought these call options at $1 and they went to $23 back in May. So, sometimes I'll see patterns, and then if the patterns don't act the way they're supposed to, that'll alert me to, another opportunity. So I know I'm throwing a lot at you guys. Maybe I shouldn't, because I don't want to confuse you. But again, I just use price and price action as a weapon. Whatever the market's going to throw at me, I try and. So to me, I was looking at this thing very bearishly, as I am now. That this, combination, this was a huge double top, and even the further price history. And all of this was sitting on a common precipice at $113. And then once it started going through this 113, my expectation was, okay, these huge bear patterns are, in place, and this is what should happen in the market if these patterns are, dominating to the extent that I thought they would. But you can see the market broke through here, and then it just stopped going down. It was like pushing on a string, just stopped going down. And then very subtly, right here, it put on a bit of a double bottom right there. I know that might be hard to see, but those 2 days stopped at the same price. And even then, I didn't get in there. I was kind of watching this thing and expecting it to go lower, but it just stopped going down. It couldn't go down. And then, that was my expectations. But as soon as it didn't start, go down, and then it started bursting above this neckline again, I had a feeling that this was a trap, that a trap had been set. And this is what we call a bear trap, where you trap all of these bears, and then when these things are set, this is what happens. So I wasn't sure, but basically I just used price action. So you can see here was my inside bar, and that was the day I started setting up the trades. I started seeing this inside bar, and I had a feeling this was coiling to do that. And that's exactly what I did. I started buying the shares in the pre-market around 520. You can see, where is this? I had 5,000 shares, and it was trading at 139 at the time, and I had $83,000. So I bought these at about $1 at $120 BYND. And you can see that the market just opened higher. And so when it opened higher and drifted back, I started buying the call options, the 125 call options, which were the 125 strike price was whatever, about here. I paid about $1.50 for these things, right about there. And these things that I paid $1.50 for in that thing went to $23. So what I like to do is, see patterns that are emerging and then grab a position before it happens. And you can't do it all the time, but you don't need to if you get these kind of trades. And I've been making a ton on the downside. I'm just losing this week, but the week's not over. Let's see what happens here. I still think that this could be a top in here, and tomorrow we could see that. So hopefully I can salvage something. So there's just been 1,000 bear patterns since those. So you can see there's another bear pattern here, this head and shoulders. And then we finally did crack this 113 neckline. I don't think you'll likely to see that again. And now we're just, dancing on a pin here, this very small support that I think will eventually go lower. I don't think you're going to see one of these uncoilings here. Well, I could be wrong. And it's not about being right or wrong. It's really looking for the moves. So even if I'm wrong on this move, I've been pretty good on these moves and these moves. So I make a fortune when, I'm correct. And then, I lose whatever I lose when I lose. And it ends up being a lot more in the winning column over a year. I've just, been on a tremendous streak. Our members will tell you on the elite, been long at, Netflix, short Beyond, long Tesla. It's just been an amazing streak in the last couple of weeks. Had thousands and thousands of, pips and open profits on some of our positions. Try and just find some arbitrary thing. So here was an email where I was short all of these positions in BYND. So you can see I've been advising our members to get short BYND for at the 120, 119.75, 112, and now it's at 104. Vishal says, do you actively manage? So with my email, I send out, where to put the stop loss, where to put the take profit. This is an example of an outgoing email. So this is an example of emails that go out every day. This was in Alibaba, where I was already speculating that we might have a goose in the stock. Feels like Baba's been overcooked to the downside. And so this is, the active open positions based on prior trade suggestions, the entry price, where it's currently trading, and then where the stop loss would be, where the take profit would be, and the open P&L. So you can see I got long Netflix at 585. It ended up running to about 640. I've been short gold since 1781. And just got stopped out of run today. So yeah, I basically indicate, where, I'm kind of looking to get in or out. Yannick says, how do you know where the positions lie? It says so on the entry. So Jorgen says, I'm a little confused about if I should hold pending orders or not to the next day, if it's different with stocks. So, with my email, basically the email is for the day. So I send out a weekly email, and, usually these are, just good for the day. So if it doesn't get triggered, let's say just, goes down, you could choose to leave it in there. I typically say cancel it, and then we'll look at it again if it's still good. Sometimes a trade won't be triggered that day, and then I'll send out the trade the next day and say, I think it's still good. And then for the weekly trades, that you should hold that trade for the entire week. So, I kind of label it as a weekly. So this thing would be pending for the entire week. So you could cancel it the following Friday if you felt like doing that. And I've had many trades where let me go and find a trade for the yen where, I put it on a Sunday and it got triggered by the following Wednesday. And here's a good example of that. So this was in a period where I was actively looking to short the dollar yen. And it's a perfect example of a pending trade that went out on a Sunday, but the trade only got triggered on a Friday, on a it's going to be too big. On a Wednesday. So this was in the dollar yen. This trade went out on the prior Sunday. It was the 22nd or the 23rd, but it only got triggered on the 25th. And it was to sell the dollar yen at 111.61. And I got out 650 pips lower. But here's the thing. It took 3.5 months. I was sitting in that trade. So, and then along the way, you can see I added to all of these different trades and made, quite a good score on that trade. And these are what are called swap fees. So people say, well, it costs you to sit in a trade. Yes, it does. That trade cost me 46 grand. But it's very different sitting in one trade for, for 3.5 months than trading in and out every single day, 5 or 10 times a day. Because every time you trade, if you trade 5 times a day times 2 pips on every trade, you're racking up, $10 just on one lot. I had 51 lots on there. So that would have been $510 every day for 2.5 months, which would have been a lot less than one trade, and it cost me 46 grand. And so I made 312 grand, including the swap fee. So yes, swap fees are just the cost of doing business, and it's expensive, but it's better than trading in and out. And that was during that period where, I told you that I was always looking to short the dollar yen. I remember it pretty well. So again, this is where, based on prior patterns, you can kind of anticipate. So based on the prior bear patterns, the double top head and shoulders that we saw here, and then this descending wedge, I started understanding what was going on. When you had this reflexive bounce and the market started coming up here, you saw this double top. And this was exactly where I put in that order at 111.61. You can see you had a very narrow range bar. And typically those, tell me that, it's just starting to, it's at the top of a channel and it just can't, it's starting to exhaust itself. So basically I told our members, and I did it myself, obviously, to put a sell stop there at 111.61. But here was the beauty, was that went out on a Sunday. And you can see after that, the market went higher. Now, if it continued going higher, my pending stop would never have been triggered, no harm, no foul, and go on to another trade. But what happened was it went to, I don't know, about 112.30, curled around, hit me, put me in this trade, and I never looked back. I was never in loss on a trade that I eventually ended up making 650 pips. No, sell stop is not stop loss. A sell stop is where you put a pending order under the low, and a stop loss is where you put your risk. So they are two different things. Stop loss, a sell stop is a pending order. It's a resting order. I'm not going to go into it too greatly. You can look it up on your, any YouTube thing. A sell stop is a pending order. It's waiting at a certain level. And if the price never gets there, it never gets triggered. But once it's triggered, then I have a stop loss behind it. So effectively, this was my risk and that was my reward on that trade. And I kept on adding on that reversal there and that one there, and made a whole bunch of dough on the way down. Vishal says, can we only trade Forex and futures and do well with your alerts? You can trade anything. I was a commodities broker for 20 years, and I traded pork bellies and orange juice and live hogs. Exactly. I always say, it doesn't matter what this is, doesn't matter what this says. I will trade this chart, no matter what you put in front of me. I'll say, okay, this is what I would do with this thing. And if it's a natural gas chart or it's a pork bellies chart, it doesn't matter to me. B says, what day of the week do you set up your weekly trades? I send out an email on Sundays. What day of the week do you set up your, okay, so any thoughts on Teladoc? Yeah, I'm looking at that, and I'm very bearish on Teladoc. But you can see it's just caught a bit of a support here. It has this key reversal. So whenever I see these reversals, then I just kind of wait for it to start. But the overall pattern is very bearish on Teladoc. So we're in this little area. We found a little bit of support. Maybe it just keeps grinding away here, but eventually I'd look for it to roll over. Okay, I think I'm going to basically end it there. This is DocuSign. I've been looking at this company too. Also very bearish chart pattern starting to emerge, where you have this double top head and shoulders looking thing. And you basically broke through, had a retest, and now if you fail, this thing looks like it's going to come down. So this DocuSign, DOCU. So this has been going up for a long time, but it looks like things are starting to turn around. So, all right, I'm going to end it there. Tim says, thank you. Very good session. I appreciate it. And I will see you back tomorrow, 4:30 Eastern Standard Time. Thanks, everybody.